Strategy outline part 2. Let's get straight into it. I've spent a bit of time looking at these blue boxes to see if I can find some sort of repeating pattern which will give me a clue on when I should and shouldn't enter this bounce off the 35. And the one thing that seems to stand out, now bear in mind, none of this will be 100%. I'm looking for something that happens quite frequently. So I'm noticing in a 3-candle move, if there are 2 counter trend candles, for example, this red one and this red one, followed by an in-trend candle, a green one in this case, because we're bullish, we're heading upwards, then price seems to respect this EMA. When we have, let's say, a trend candle, a counter trend candle, and then a trend candle as the cross, it kind of hovers around there. It's not quite done with the EMA until it's actually put in that 3-candle move. So part of my rules to do with this strategy looks like it's going to involve needing 2 counter trend candles and 1 trend candle. So we look, here it is again, 2 and 1. This one, while it does hit the 35, it kind of hovers around it again because it hasn't put in that move. And then we get it right here, 1, 2, 3. Moving on again, we're getting back to the 35 and we get our 1, 2, and 3. And we get a nice bounce up out of there, a 1, 2, and a 3 with a long tail. We're kind of breaking into uncertain ground here, but we do get that push up. We have an interesting one here because we have that candle that crosses it, candle 1, 2, and 3, but that doesn't fill me with confidence because these are the 2 that I'm focusing on. So I think I'm going to focus in on only having the candle 2 and 3 as the ones that cross, or those ones being a requirement to cross, uncertain about the first. And although this does push down, it doesn't fill me with confidence that this one actually closes on the other side of the EMA. So while this would have been successful, I'm not going to count that because of where the EMA sits in relation to the close of the candle. We have another one here, but that looks like it wouldn't have respected that bounce. It's turning around, but we get a break above it, and then we pull back into a 2 counter trend, 1 trend candle. Okay, we have another one here, which depending on how big our stop is, that may or may not work, but when we get the push down, we bring it back, and we've got one more here, and this, the second candle, while it does open and close on the other side, it still breaks through with a wick, so the wick touches the EMA, and our bounce candle actually crosses and bounces out of the EMA. So I'm interested in that pattern still as well. Here we are with the same thing again, and we're broken to it. So I want to make sure I know when I'm bouncing to the other side of it as well. For example, when I'm going to take a trade when it's crossed over. So this is an interesting point here because we have a breakdown, we have a break up, we have none of that signal in there, which is a good sign because it's not giving us false signals. But I think I'm going to actually use these candles as a bit of a point of reference as well. When there's no body and no wick touching the EMA, I will trade on that side of the EMA. So these ones are obviously not touching, they're above it, which means I'd be looking to go long if there was a bounce here, but there isn't, so we pull down. This wick here, is that? Nope, that doesn't touch, but here we are, we get the bounce there. And we hover around the EMA before pushing down again. So we have a break, going back into it. This one here, once again, while it would have been successful, we have these candles. This one doesn't touch, and this one actually doesn't close above the EMA. That's not going to be a valid entry. Once again, same with this. None of these candles actually touch the EMA. This one's not a valid entry too. So while they are in trend, they aren't in strategy. If we're being very strict on rules, and we're requiring at least the second or the third candle to have the wick cross the EMA, this would be a valid entry. Same with this. This has quite a large wick cross, and that, although it doesn't look like it would be a successful trade, would be a valid entry. This is an interesting point. We have a doji candle, so there's almost no price difference between the open and close. We can see we got up to here, we got right down here, but we closed here. It shows a bit of indecision. So I'll have to figure out what I'm going to do with these candles in this instance, whether I just completely disregard them and take the color of the candle prior, or whether they will contribute as well, or render the whole trade null. So here we've got more consolidation. I'm going to look for ways where I can stay out of entering trades here, because this could be quite a bad losing spree. But here we have a prime example. It pulls back to the 35 perfectly on and bounces off to push way lower. So back at January as well, let's look back a little bit. So we have a bit of consolidation here. I'm going to look at how I can stay out of these trades, which would be losing trades. This one here is a great example. This is a great example of why I'm looking for 2 counter trend candles before our trend candle. Here we have them alternating. It comes out of here and goes straight up, so breaks the EMA. So it's a sign of weakness in the trend to me. Here's another great example. Large candles here, but it has a large push down as well. If that middle candle touches the EMA, does it? Oh, ever so slightly. So it's questions on whether that's a valid one, but as we can see now, since we see how it resulted, that would have been a winner. We have another 2 examples. A perfect little one in there, perfect one in there. It's looking like a pretty consistent feature. Now that we know how we'll identify our trade setups, let's start formalizing this in our strategy outline sheet in part 3.